All right, this is the DeFi Podcast, the only podcast on decentralized finance. I'm your host, Karim Sabba, and together we'll delve into the decentralized finance ecosystem, or DeFi for short. DeFi is actually one of the most exciting developments within the blockchain space. Up until now, the traditional financial system has created enormous amounts of wealth for the happy few who had access to the resources and knowledge necessary to be at the big boys table. But since the boom of blockchain, countless projects emerged to try and rebalance the global access to basic financial services, such as transferring value, lending, or insurance. Now, DeFi has flourished to include stablecoins, decentralized exchanges, marketplaces, new investment products. The list goes on and on. Today, I have the pleasure of welcoming Emin Gün Sirer, founder of Ava Labs. Hello, Gun. How are you?
Hi, thank you very much for having me, Karim.
Of course. Thanks for coming. So let's get right in. So, Gun, I introduced you as the founder of Ava Labs, but to be more precise, you have a very long background in the blockchain ecosystem. What do people mostly know you for, you think?
Not sure what they know me for. They know me partly for having built the first proof of work currency way before Satoshi, 6 years before him. They might know me for finding the biggest known flaw in Bitcoin that cannot be fixed. It's called selfish mining. Or they might know me for the DAO hack. So those are all, they marked turning points in crypto world. But these days, my focus is on Ava and the revolutionary Avalanche consensus protocol. That's something that I'm also known for.
Okay, great. We'll definitely talk about Ava in a bit. What I'm interested in is at some point in your career, you founded and you started to lead the IC3 initiative. Is that correct? Are you still working on this?
Yeah, so IC3 is a multi-institutional effort. It's an organization of about 7 or 8 universities containing about 15 to 16 researchers, professors, and maybe around 100 PhD students, all working on blockchains of different kinds. IC3 has made enormous impact in this space and has touched a whole number of chains, whole number of cryptocurrencies. I was one of the co-directors. I'm currently on leave from that position as well because I'm focusing on Ava. But IC3 is something that I'm really proud of as well.
Awesome. And in that context, were you in touch with, I don't know, corporates looking to learn about blockchain with researchers or regulators or policymakers and so on?
Of course. So IC3 spends a lot of time reaching out to lawmakers, reaching out to executives, or generally reaching out to the public and to opinion swayers to make sure that we advance the cause of blockchains. I have personally briefed more politicos than probably anyone else in the entire blockchain space, possibly more than the entire blockchain space put together. I spent a lot of time on this myself and spoke to a lot of people. And to the extent that regulators treat this topic with soft gloves in the US, I feel like I played a small role in making that happen. So yes, IC3 spends a lot of time on this. We teach an enormous number of courses. We reach out in lots and lots of different ways.
Interesting. And so, what did you learn? I mean, a bit of context. We in France launched the French Digital Asset Association, and we found that corporates or regulators or policymakers would often buy in very quickly in the idea of blockchain and digital assets, but then struggled a lot to get some momentum within their organization. So it would either take So it would take like months or even years to get something done, or it would get shut down. Did you witness the same thing in the US?
I completely did. It's that experience is global. Everybody goes through the same process. It's very frustrating. So let me tell you what I discovered. So I'm also the advisor to the Cornell Blockchain Club at Cornell. And, also I opened we all opened as a group We opened the NASDAQ in the spring. So we're the first cryptocurrency effort to open the NASDAQ. And so, yeah, we're at the forefront of a lot of activities. But you are absolutely right. So what do I see when I look around? I see an enormous amount of interest. On campus, I see interest in blockchains from all kinds of people, not just computer scientists. In fact, mostly from non-computer scientists, regular finance people, anybody with an entrepreneurial spirit, people who understand how finance and asset trading works. They all are very, very excited. So that's great. Especially the younger they are, the more excited they are. So that's all fantastic. Then what happens? Well, when you look at these companies, every large company is just geared to want to go in. Everybody has an innovation office, and the people there, of course, want to explore blockchains. But even the more stolid companies that have, the ones that are slow to move, even they know that they need to look at this revolutionary thing. So that's great, right? So everything is set up for us to succeed. And then what do we see? We see proofs of concept abandoned. There is not a single exemplar out there that I can point to and say, that was the case of a company that explored blockchains, then translated them into practice, then deployed them in a mission critical setting, and now they're making money with it. That doesn't happen. In fact, most of the culling happens at the stage where they're going from the proof of concept to the next stage. Essentially, 100% of proofs of concepts are abandoned. And the reason for this, if you ask me, is very, very, very simple. It's just the following fact. The two facts. One, the performance and scale of these new technologies are nowhere near enough to disrupt anything. You could hardly disrupt a corner store at 3 transactions per second. Okay? So the technology that we have, it's great. It shows us what's achievable, maybe, but today's technology, the first generation of chains that we have seen, they are so slow as to be laughable. So all of these people who explore these areas, this is the first thing they discover. The tech isn't quite ready. And the second problem, or the second issue, is these systems are designed from the ground to be extra legal, to be outside the legal system. They don't mesh with what we have. It's just its own external bubble, and it can't really interact with the assets that we have. So that creates an enormous impedance mismatch. These people know how to trade assets, but they don't know how to translate those assets into the crypto world. Or when they try to do so, there's some insurmountable problems when you try to bridge those two things. So these problems exist; they're everywhere, and I'm sure the people listening to me right now, I'm sure that this resonates with them at some level. So I've seen this exact same pattern everywhere I've looked, and this is one of the things we want to address with Ava, the system that we're building.
Yeah, interesting, and yeah, we'll definitely get into Ava. And I remember hearing you in one video where you described smart contracts as an extension level event for corporations. I found that pretty funny. Could you expand on that?
Of course. So if I go back, so if I roll the time back to prehistory. So let's just go back thousands of years. And then I fast forward to current day, looking at things that changed how we conduct business. So things that we did in the social sphere that changed how we conduct business. There are only a couple of events that really stand out. One of them is the written law. And that made an enormous change. I'm sure everybody listening to me right now has heard of Babylon, but Babylon was not the only country in Mesopotamia. They had all kinds of neighbors to the north, south, west, east, everywhere else. And nobody's heard of I think it's called Enul Shaur or whatever their northern neighbor was. It's like you've never heard of them because they never left a mark. The big mark was left by the Babylonians, who figured out how to make business go more smoothly, how to make the process of being a citizen much simpler by simply having your laws written down in some way such that they create confidence that the law is not in the hands of a single ruler, not in the hands of fallible people, but is instead something that applies equally to all, insurmountable. So that's a big, big event. Fast forward some more, you've got money coming into the picture, you've got contracts coming into the picture of different kinds, and finally you have corporations coming in. So these are all big, big events that changed the shape of business. And now it's unthinkable to be in the business as an individual where you have the corporate, we have different kinds of corporations. We have the corporate veil, which is a critical thing that enabled corporate persons to take action. All of these gave us the system that we have today that creates an enormous amount of value per second. So what do smart contracts do and how do they play into this? Well, smart contracts are just programs that direct money. They are a way of codifying a set of procedures, a set of business logic in a way that cannot be changed. Just like the Babylonians did. They say, look, this is what we're going to do. If you do this and the following things happen, then you get this payout, right? That kind of a thing. And it's, if people who've never heard of it, they can think of it as an Excel spreadsheet that can accept money and that can disperse money. And this is a very powerful thing. Why? Because you're cutting out the fallible humans from the picture. You're getting rid of the intermediaries. And instead, you're creating this straight channel that cannot possibly ever divert the funds elsewhere. And that completely changes people's interactions with these corporate entities. You no longer have to trust the corporation. Their reputation is not that important because their behavior is constrained. And that is an amazing thing to want to do. It's high time that we started looking critically at these institutions around us and saying, well, look, you're saying a bunch of things, but I don't know that you are indeed a charity that really will send the funds to a charitable cause. I don't know that you are, XYZ, whatever people are claiming to be. And I would have much more faith in all sorts of business processes if they came codified in smart contracts. And so that is why I believe that many corporations are going to be replaced by their smart contract equivalents that provide a similar service, or maybe perhaps even the same service, without having to rely on reputation, having cut out the middlemen, and having made the frictions go away, having made the intermediaries go away. And therefore, that will create a much better foundation for interactions because you know what your counterparty can and cannot do.
Interesting. And so going back, so if I push that trend from written law to contracts and corporations and now to blockchain and smart contract in like maybe 10 or 20 or 30 years, what will the corporations of tomorrow look like in terms of governance? Who will make decisions? Who will have control? What would it look like?
A fantastic question. So first of all, there are many, many, many corporations today that simply collect their revenue just by sitting at they've cornered something. Okay, it's like, think of it as a troll on top of a bridge. You want to pass over the bridge, you have to pay the troll. A good example of this is, in the US, we have Charles Schwab. You want to own some stocks, you go to Charles Schwab. There's a guy there, he smiles at you, he gives you the firm American handshake. He talks like an American, 2 octaves deeper than he should, kind of like that. And so, they do all those things. And they're doing all that to try to engender this trust. And he's acting like he's a trustworthy person. He's going to take your money. He's probably going to give you very poor execution on your trades. That's why he has to be very affable, very likable in person, because he's going to screw you over later. And you have to trust him. There is no way that you yourself could actually partake in that global system. You have to go through that intermediary. Or switching gears, today's banks, what do they really do for you? They do nothing whatsoever. In Europe, it's maybe slightly better, but in the US, these guys haven't seen innovation since 1956. Okay, the fanciest thing that they will allow you to do is they will allow you to post-date a check. That's about the max you'll get out of a bank. Anything else is beyond their capability, is beyond what they do for anybody. But you want to be in command of your payments. You want to write fancy payments, right? I want to be able to say, look, I want to give this money to somebody on the condition that they do X, Y, Z later on. And if they don't do those things, then I want it back. This is a complicated kind of an instrument, but I need to be able to write it and issue it. And yet, this is very hard to do with today's technology. So smart contracts allow us to just get rid of the intermediaries involved in these kinds of transactions. Take an insurance company. What is insurance? Why do I see, as I drive up the northeastern corridor from New York towards Boston, there's a zone which is full of insurance companies. Right now, I'm in Brooklyn. I'm looking at Manhattan. There's a building right there, one giant skyscraper full of insurance people. So that's fantastic and all, but why are those people collecting that cash in the first place? I understand the reason for why you might have assessors and so forth, people on the ground, but everything else is just pure overhead in the process of bringing people together. So all of these are going to be disrupted. A lot of the incumbents will go away the same way that Dodo disappeared. I think we're going to see a lot of these old decrepit companies disappear on us. What's an internet name service provider? These guys charge you $12 per foobar.com, whatever you might want to register as a domain name. And they're not providing you $12 per year of service. I'm not getting three coffees worth of service out of my name registrar. It's unclear if I'm getting $0.12 worth of service from these guys. It's just a crazy, brutal world out there with a lot of incumbents sitting on bridge corners trying to collect cash. So smart contracts will do away with these as people realize, hey, I can go through this thing. I know exactly what it can do. It's like a robot. It's like an automaton. And there is no fat cat at the top trying to, make his mortgage payments and in the Hamptons, trying to take the helicopter out of Manhattan to his, whatever summer place every Friday afternoon or whatnot. So that goes away and gets replaced by something that says, look, I will efficiently connect you with the people who provide the services you need. And that is a fantastic, fantastic way to rethink business. That how can we get rid of all of these people who provide little value and replace them with automated versions that smooth the entire interaction by assuring everybody that they cannot misbehave.
Yeah, fascinating. Yeah, I'm very much looking forward to this. So let's talk about Ava Labs, and then Avalanche. So to give some context to our listeners, could you maybe walk us through quickly through the existing families of protocol in your field, which is distributed systems?
Of course. So let's see. Distributed systems has been around for 45 years or so. And at the heart of all of these blockchains lies a very fundamental problem, which is how do we get a large number of computers to remain in sync with each other and to agree on the same outcome of events? We're going to want to keep track of what happened. I sold you a share of some corporation. You paid me this much. I went and bought something, et cetera, et cetera. Some assets were issued. Other people purchased them. There was a transfer of hands. We have to agree on what happened. If we don't, then the financial world will fracture. We will not be able to maintain records. And if you can't maintain records, then, then the end, you are not serving finance. That's not suitable. Well, okay, so how do we do this? Well, that's known as a consensus protocol or the consensus problem. Another name for it is the Byzantine generals problem, which is essentially you have a large number of players. Some of them are mischievous. They like to play games. Others are evil. They like to take your money. They like to screw you over when they can. And even in the presence of such mischievous behavior or such evil behavior, you want everybody to be able to uphold the same financial history. That's the consensus problem. It's the same problem as trying to coordinate a bunch of Byzantine generals who are willing to sell you out at a moment's notice or without any notice. So what happened in that 45 years? Well, there were only two families of protocols in those 45 years that people ever explored. The one family that my academic colleagues examined for the longest time is known as classical consensus protocols. These protocols are similar to the protocols that you see employed in parliaments. You have a small number of senators, you want them to record their decision, and you want them to come to an agreement. Well, then you follow a certain series of steps to decide when the parliament has decided. Essentially, you're going to have a voting scheme, and when you reach a certain threshold, you need to, then you can safely commit. And we have to all understand how the parliament changes, what happens when the parliament leader is dead, etc., etc. So these classical protocols, there have been many of them, hundreds of them, maybe thousands of them. And academics love to explore this space. There's tons and tons of them. Facebook's Libra is based on a classical protocol developed by one of my students. There are many other protocols out there. Anybody who looked at a permissioned blockchain, or who ever heard of a permissioned blockchain, probably heard of a classical protocol. These protocols are great in the sense that they can be somewhat fast, but they absolutely do not scale. If you have more than 100 participants, more than 100 senators, these protocols begin to croak. They begin to just keel over and not be able to function. And the other thing, of course, is we all have to agree on who those 100 participants are. And that's why they are good for permission settings. When we all can agree, look, we're going to turn over all of the world's supply chains to these 100 corporations. If we could ever say that, then classical protocols and permission blockchains would be a great sell. But the problem is, nobody will ever agree on who those 100 people ought to be. And in fact, that's why when Satoshi came into the scene in 2009, he looked around and he said, look, all of this work that you academics have done in the space of classical consensus protocols, it's completely inapplicable to what I want to do. What he wanted to do was build an open system that's capable of functioning as money for the entire globe. And he said, look, we can't agree on who the 100 senators ought to be. That's preposterous. And so we're going to have to come up with a new protocol that allows us to essentially incorporate anybody who wants to participate and do so in an open fashion without having any sense of, who's a member, who's not, who's in the permission set, who's in the Senate. In fact, there is no notion of a Senate in Bitcoin. So when Satoshi came in, he came in having invented a new protocol. We call it the Nakamoto Consensus Protocol. It's at the heart of Bitcoin and other cryptocurrencies. And the nice thing about it is that anybody can join the system without permission. The problem with it is it absolutely does not scale. So Bitcoin these days is getting about maybe 4 to 5 transactions per second. At that speed, you're lucky if you can run IKEA on a Saturday. That's very, very slow. You're not going to be able to, actually go against the dollar dominance in the world. Those are great dreams, but that dream is just going to be inaccessible to you. That's kind of like the dreams I have of becoming a rock star. You hear my voice, it's cracked from talking too much. I'm not going to be a rock star. It hurts me to say this, but it ain't going to happen. Just the same way that Bitcoin is not going to replace the dollar. The maximalists will try to sell it to the public. They will try to lure people in. But the dream, as compelling as it is, to rewrite finance on a much better foundation, it cannot be achieved with this technology. And it cannot be achieved with variants of this technology either. That mining that happens in the background for Nakamoto Consensus constantly leaks money out. You're leaking about $300 million a year just to these miners, these Chinese entities mostly Chinese, that simply convert essentially electricity, partly from hydro, partly from coal, into tokens. And for security, that coin relies on that, and you have to pay this enormous sums of money to these people for maintaining the records, and it's just a crazy thing to be doing. So that brings me to what happened last year. Something magical happened last year. Somebody invented a new consensus protocol family. This doesn't happen all that often. This classical family was invented by two of my highly respected colleagues, Leslie Lamport and Professor Barbara Liskov. And both of them have Turing Awards, the highest recognition in my field. And so that was, they created the framework for a lot of work that came after them. Later on, we have Satoshi Nakamoto. He holds about $10 billion worth of Bitcoins. He's absolutely fantastic. He was rewarded with those Bitcoins. I'm not sure if he's still alive. Sounds like he's not. And now we have Avalanche. And the interesting thing about Avalanche is, A, this kind of thing happens only once in 15 years, obviously. It's only the third time in human history that it's happening. B, this protocol combines the best of classical with the best of Nakamoto. So the Avalanche Consensus Protocol family is open and robust, like Nakamoto Consensus. Anyone can join. And yet it's also efficient, like like classical consensus. And best of all, it scales like no other. It scales much better than classical, much better than classical, and also scales with far less energy usage and far less leak of value out of the system compared to Nakamoto. So that makes it a very, very quick network, a very high throughput network that can actually support the kinds of demanding finance applications that we would like to go after. So I'm really excited about its prospects. And at Ava Labs, we're building a coin called Ava on top of this Avalanche consensus protocol.
Okay, fascinating. So we did get the idea. The main idea is scaling first. Is that right?
The very first, so when it comes to Avalanche, the protocol, what it does is it gives us enormous performance. It gives us quick finality. So transactions are finalized within a second or two. And this compares much better to, say, compared to Bitcoin. Bitcoin takes about an hour to finalize. Credit card payments, they take at least a few seconds, if not more. Usually for me, it takes several seconds to confirm. So this is the kind of system that can give you that quick finality. You know within a second or two that your transaction is done. There is no more to do. Second, it gives us very high throughput. So that's fantastic to have as well. So we're seeing in our testnet, we've seen numbers as high as 19,000 transactions per second. Our current testnet is getting us about 6,000 transactions per second. So besides quick finality and high throughput, it also gives us enormous scale. We can incorporate any number of participants in our protocol. We are not restricted to just, Zuckerberg and his 28 buddies keeping the records for the world as proposed for Libra. We're not limited to 19 mining pools for Bitcoin or 11 mining pools for Ethereum. This is completely different. We can have thousands to millions of participants, and we're supremely excited about this opportunity.
Okay, and so what's the underlying goal there? Is it to try and challenge digital currencies, or to try and challenge smart contracts platform? What's the first problem that you're going to try and tackle with this?
So great question. So we're building a new platform, and it's both a payments platform and a smart contract platform, but above all, it's an asset issuance platform. This is a platform built from the ground up for creating new digital assets. And what's a digital asset? Well, it can be anything. It can be a playing card. It can be a stock, a bond. It can be any one of instruments that people on Wall Street trade or would like to trade. They don't, even asset issuance on Ava is so easy that the kinds of things that are hard to create in today's world are trivial to create in the Ava world. So we are going after these digital assets, or digitizing assets that are not currently in digital form, issuing new virtual assets that can be traded fluidly across the world. So that's our real big market. We don't see the other currencies as cryptocurrencies as our competitors. I don't want to try to make money by stealing users and so forth from Bitcoin. Bitcoin does what Bitcoin does. Okay, it's fine what it does, and so we don't want to compete with the incumbents. We essentially want to go after about the 3 trillion or so of assets that are currently not in any digital or blockchain form. So I'm really excited about what lies in that direction, and we can't wait to unveil our platform and start building new assets on top.
Yeah, of course, and I wish you the best for this, of course. So let's take. There's something that interests me that's stocks. Basically, today trading stocks is already digital, pretty much available for anyone with an internet connection, a way to open a brokerage account on an app. So, can you explain what's fundamentally different from trading stocks digitally against trading digitized assets?
Great. So let me tell you the differences that one will feel immediately between the world as it is today and the world it will be when these same assets are issued on top of the Ava platform. There are three things I want to harp on. The first one is the fact that you need an intermediary to trade your stocks. That's your problem number one. You are not an equal player on the table with all these other financial houses. And, I remember when I was starting in high school and on up, when I was in grad school also, I was really excited about high frequency trading and arbitrage opportunities. And if you actually look into it, as any smart person, and there are many, many smart people out there, can make money by identifying arbitrage opportunities. But it's difficult to actually collect the money to really actually make it in the real world because you have to pay all these fees to all these intermediaries. Well, so now you can be your own first-class banking partner, holding these assets in your hand yourself, and and trading them directly yourself without having to go through somebody whose execution you have to trust. That's number one. Number two is on the stocks front. So we're not talking about issuing new assets. We're talking about existing stocks, right? So this is this is a fine use case. Let's go through this. So number one was you don't need intermediaries. Number two, you have assurances that you do not have in the current system. I think some of your readers or listeners might know about the case of the Dole company, but they might not. So what happened with the Dole company about 2.5 years ago was they ended up having to count the number of shares they have outstanding. And in fact, it's a bit of a long story. I'll cut it short. They got court ordered essentially to pay something to every one of their shareholders. And they said, okay, guys, if you were a Dole stock holder, let us know. And they know that they've issued 38 million stock certificates. So the maximum number of people to whom they could pay is 38 million. And yet they had 53 million people make claims. That is really, really complicated, right? So suddenly it's like, whoa, what's going on there? We were expecting claims on 38 million certificates, and we got claims for 53 million certificates. I said 53 million people. That's not right. I meant 53 million certificates, however many people were holding them. So that's a huge problem. Right? So somehow 53 million people thought they held Dole stock. That's crazy. The whole system went south. And it turns out it's a very complicated accounting problem, and Wall Street got the story buried. But I'll tell you what exactly happened. During certain times of stock price movements, trading is suspended. And when trading is suspended, it takes place off Wall Street on exchanges. And then it's reconciled later. Well, during that reconciliation process, there was a problem. And suddenly people were creating multiple copies of the same certificate. Essentially, you had two people who thought they owned the stock. In fact, on the systems and on the books, they owned the stock. Meanwhile, they didn't. There's only one certificate for those two people. So can you imagine what this did to the stock of Dole Company? There are 53 million people out there who think they own it. There are only 38. The price should have been higher. These people all got screwed. And so what you get with a system like Ava is that you get the assurance that this instrument will obey a certain set of rules for all time. If there is 38 million issued, there will not be 38 million and one. That extra one will never, ever, by construction, be created or is creatable. And you do not have to take my word for this. You can audit this as an individual from your own den yourself. You do not need other people's say so. You do not need other people's guarding of the financial system to have this assurance. This is something that Wall Street doesn't have. It has a whole lot of complicated systems, layers upon layers upon layers of regulation. And at the end of the day, they can only say, well, we worked hard to make sure that everything's working as expected, but that's about the best they can say. Whereas with Ava, by construction, any restriction on the asset you create will be obeyed for the entire lifetime of that asset. The simplest one, of course, is a simple scarcity, right? I issued 38 million. I expect to have no more than 38 million claimants for all time. That's very simple. But there are many more complicated restrictions that we can enforce on our assets on top of Ava. And so finally, the third and final thing that Ava can offer that others cannot has to do with a similar point, but it's different. When you do trade stocks today, you have no idea how good an execution you're getting. And, what do? You say, go buy something. Well, there are so many people between you and the ultimate other person on the other end of that trade that you traded with. People love to fight over your stream of buys and sells because retail people are considered uninformed and they're considered the juiciest stream possible. They're just submitting very dumb orders into the market. They're getting usually the absolute worst execution. And the way you actually have any assurance that you're not getting bilked is simply that there are a bunch of auditors and regulators who are trying to make sure that nobody's fixing the markets. Right? The market makers are not communicating with each other. They are not looking at the internals of the order book. They're not looking for stop loss points, if that makes sense to the listeners. If you could see where people will sell, right? So if I know that inside your mind you are ready to sell IBM when it drops below a certain threshold, maybe I could do something like dump IBM, trigger you, buy your shares, raise the price back up and sell them. So there are lots of things that people can do, like stop loss hunting, which I just alluded to, because they have inside information at the exchange. With Ava, we provide the absolute correct by construction guarantee that trades take place without any front running. I do not need any auditor. I do not need absolute zero of the enormous federal machinery that we have to ensure that we have an efficient and fair market. It's fair by construction, correct by construction. So those are the three things that would make the stock's life much simpler, better, if they were implemented on top of Ava.
Okay, got it. Very interesting. The main challenge that I see and that you started to mention a bit is the liquidity. I come from trading. I used to work on primary markets, and I did manage a small secondary market book. Tomorrow, if we have digitized assets, do we have financial institutions that are ready to manage digitized assets liquidity? Is that something that where you would come in play, or is that someone else's problem?
No. This is something that's very much my problem. That's something that we are addressing in Ava. So the short answer to your question is no. The financial institutions want to have absolutely nothing with crypto as it is today. Nobody wants to build services on top of Bitcoin. Right? The Bitcoin developers aren't looking that way anyway, and nobody wants to go that way because the underlying infrastructure, it's not clear what it really provides for you, right? It stores transactions between people, but that's about all it does. The network that holds this information, this data, is essentially a bunch of ragtag people coming together, deciding to run some cheap PCs and providing a best effort service. This is not the kind of foundation on top of which you can build a financial product. So that's one of the many reasons why there's this big gap. You can jump into the Bitcoin world. You can trust that that network will remain around and will do things the way you want them to. But there is absolutely no reason why they should behave the way you'd like them to. So in Ava, we have a different model The network participants can be classified into different groups, into different what we call subnets. And these subnets can enforce whatever rules are necessary for a compliant, regulated market to be issued. So this is a fascinating jump, and it is the missing link between the world of legal assets and regular reality that we all live in, and the extra legal reality that cryptocurrencies have targeted. If you want to buy drugs, cryptocurrencies are okay. Like, they're not actually the best for buying drugs either. It turns out cash is much better because it doesn't leave a trace. But it turns out that if you're going to do an online payment, Bitcoin is fine for this. But for any other purpose, it's extra legal. It doesn't actually merge with the legal system. Whereas if you do these things on Ava, then you get the benefit of having a legal foundation. The nodes that hold your information, your state, are going to be nodes that are potentially part of a legally binding agreement, if you want them to be. Or they could be nodes that have certain qualities that are necessary for your asset. For example, they could be all in the same jurisdiction. Or they can be nodes that have been vetted in some manner to not misbehave. So this last one is fascinating technologically, and it's also fascinating in terms of its implications. It means that the asset can only behave a certain particular way. So all of these things allow us to build a foundation that's much better than what Wall Street has today. Wall Street guys are fine, but as I said, they require a lot of regulation, and they manage to screw things up. Just about every 8 years or so, they trigger a crash. But you can constrain them, and Ava is the kind of platform where you can actually enforce those restrictions.
Okay, got it. Very interesting, Gun. Thank you so much. For the last question, I would like to talk with you about the DeFi ecosystem. That's a fairly new term to define blockchain apps working on decentralizing existing financial services. One might say Bitcoin is the actual first DeFi app, but really the term got some traction in the last 2 years with lending and borrowing platforms, prediction markets, and tokenization platforms. So my question is fairly simple. What's your take on the whole movement? Does it make sense to sort of narrow down to one industry, in this case, the financial industry, and then work as a pack?
Absolutely. I'm really excited about decentralized finance. I think I don't know how I feel about the term decentralized finance. Disintermediated would have been my more favorite term, really. But it's a fascinating world, right? It's an approach to rethink the very foundations of how we do business, and whether we can reduce the number of intermediaries, whether we can make it more efficient. And what I see, what's happening right now, is as a very, very early set of steps in this direction that are showing already some traction. And how much is that? Well, the biggest platforms are only in the dozens of millions dollar range at the moment. But this is a field that's going to grow immensely, and it's really fascinating to see how it will disrupt how Wall Street functions. Ava is very much targeting decentralized finance or disintermediated finance, and it's itself a tokenization platform, an asset issuance platform, and it can do things that no other platform can do. So I'm really excited about what we're going to be building together in the next decade or so.
Okay, awesome then. Thank you so much, Gun, for your time today.
My pleasure. Thank you very much for having me.
Of course. I hope all listeners appreciate your insights. Guys, if you want to know more about what Gun is doing, go to avalabs.org or follow him on Twitter. He's pretty active and pretty interesting and funny. Anything to add, Gun?
Not really. I maybe just the following fact. So cryptocurrencies, when you look at them, they can be very partisan. There's a lot of people out there who have no idea what they're doing. They've bought into certain tokens, and they're bag holders of those tokens, and they make a lot of noise about them. It can be very adversarial, and at times very cantankerous, very toxic, very, I don't know what, like lots and lots of belligerence in that space. But the bottom line is, this entire space will either all together go to the moon and replace what Wall Street is doing, or it will all sink in and turn into a bunch of pink sheets or even worse. So I've spent a fair portion of my career making sure that the space has the technological foundations that allows it to replace Wall Street. And I am now working to make sure that the business and finance components are there to make that vision happen. And so the thing to remember is we either all rise together or sink together.
All right. Thank you so much, Gun. Well, wishing you the best for Ava. I'm really excited to see what you guys are going to do. That's it for today. If you like the show, go to defipodcast.com. Thanks for listening. Bye.